Hello and welcome back to the Straight Line Path podcast. I'm joined here with my co-host Peter. In this episode, we speak with David Jelly. Now, after a number of years in banking across London and Dublin, David Jelly founded Property Bridges in 2018. Property Bridges is a peer-to-peer crowdfunding platform that connects property developers with investors.
It was great talking to David today. We talked about a whole range of things spanning from the current housing crisis in Ireland, the rise of alternative investments, and how tax policies in Ireland are disincentivizing investing. We hope you enjoy. Thank you.
David, thanks for coming on the podcast.
No problem. Glad to be here.
For those that are listening at home, can you give us a little bit of a rundown as to what Property Bridges is?
Yeah, Property Bridges is an investment platform. So it allows retail investors, kind of businesses, pensions to invest in the construction market. So typically to get access to development loans, construction loans, it would have been kind of restricted to banks, high net worth individuals. But what we're doing is we're providing access to anyone. So any retail investor that has more than €500, we're giving them access to invest in the sector. So it's a completely new kind of asset class for retail investors, and it provides a bit of a bit of diversity. A lot of retail investors have access to the stock market now. They can invest in crypto. The investment world is kind of opening up. You can do a lot of investing on your phone now. So we're just providing another option for investors.
Yeah, and we can see that as well with the world of alternate investments. They seem to be really on the rise. I'm wondering what led you to maybe get into this space, because I'm aware you weren't always in real estate prior to this.
Yeah, so I spent most of my career in banking. So I spent a few years in London as an equity trader. When I was in London, the peer-to-peer sector was growing quite fast. And what frustrated me at the time about my job was there was so many different layers of intermediation between the investor and the end investment. So what I loved about peer-to-peer lending was the direct nature of it. So if you take our platform, for example, you can log on today. You can look at the projects from around the country. You can look at who's building the project. If you're in the area, you can go and see the project being built. So there's a real direct nature of peer-to-peer lending, which is what attracted me to it. And at the time, whenever I moved back from London, there was a massive shortage of funding in the property sector. So small to medium-sized builders find it very difficult for their projects to get funding. And at the same time, banks were paying little to no interest to investors. So it's a way to bring investors and developers together.
Yeah, and I like the way that you've kind of solved two pain points there with a win-win. So you're solving, the returns that the average retail investor would get, as well as the shortage of funding for these smaller developers. And I was wondering, in terms of like the Irish culture of investing, we feel that we don't really have one, as opposed to, when you look across the pond with the US. Has that played into your hand in any way, or has that affected yourselves? And why do you think we have that kind of culture here in Ireland?
Yeah, so just go back to the win-win situation. So we actually believe it's a win-win-win. So it's good for the investors, good for the borrower, but it's also good for the community as a whole. And all of the returns that we pay out, our investors typically reinvest, so that money is going to be spent in the domestic economy. But if you go back into the Irish investing culture, you're right, we do lag quite far behind. And I think one of the main reasons for that is how it's penalised. So if you invest in property in Ireland, or you invest through peer-to-peer loans, that will qualify as unearned income. So income tax will apply. If you invest in the stock market, it'll be capital gains. If you invest in ETFs, it'll be capital gains as well. And there's the deemed disposal tax as well. So it's very frustrating that if you want to invest in your local economy, you get punished for that. And we think it should be incentivized. Like, I'm not sure if you saw one of the posts that I put up last week on LinkedIn,
Yeah.
with the government bringing in this hospitality tax. So the government are trying, quite rightly, to try and carve out kind of the fast food chains from this, the lower VAT rate on food in hospitality. But when it comes to investing, that seems to be flipped. So the government tries very hard to attract these big foreign investment companies, and the structures that they can set up can be very tax beneficial. Whereas a small retail investor, domestic retail investor that's investing kind of part of their savings will be punished, and we think that that needs to be changed. It just doesn't make any sense. Like, if you have an American fund that's investing here, the proceeds are likely to be transferred back to America. Whereas if you incentivize Irish people to invest, they're investing in local businesses, they're generating wealth, they're reinvesting. It just makes much more sense to incentivize it instead of penalizing it.
And actually, just to ask you a question on that, do you know why? Is there a rationale as to why? Maybe you don't know this, but why the government penalizes, let's say, the lower level retail investors? Like, why are they disincentivized to, invest their own money? It has it to do with the banks, maybe, do you think? Or and is there anything the government should probably do to go back on this to essentially incentivize these retail investors to invest?
I think it's a political thing. So I think the left the left would rather tax kind of wealth and kind of high earners, more so than labor. So that the left would be fighting for kind of higher taxes on investment, because they would deem those people to be wealthy. So I think it's a political thing. But when you look
Mm,
at it, most people in Ireland now, if you manage to, if you're lucky enough to do well and earn a good salary, I forget what the salary bands are, but I think if you're earning over 45,000, you're going to get taxed somewhere close to 50%. So then if you kind of invest what's left over from your savings, you're getting taxed another 33% or 50% on top of that. So by the time you make a return, like, you're getting double taxed. So it is punitive, and it's hard to generate wealth, and it is hard to get ahead.
So we've mentioned, a lot of these disincentivized investment in Ireland with the tax, deemed disposal, the high capital gains, and we can see this, even across Europe, and savings are extortionately high. How do you actually market that then to an investor to tell them, Property Bridges is the one for you?
Yeah, well, luckily, you know, everywhere is taxed extortionately high, so the playing field is level, I guess. We're marketing that we're just an alternate investment. As I was saying previously, a lot of people have access to the stock market now. A lot of people think the stock market is very highly valued. I think if you look at it in historical terms, you'll see the same. You see, like, the greatest investor of all time, Warren Buffett, holding a lot of his reserves in cash at the moment because of those valuations. So all we're trying to do is we're just trying to be an alternative for some investors. So if you don't want to have all of your portfolio in the stock market, well, then you should look at other forms of investment like ours. So we're providing a fixed return. So we provide a fixed return of about up to 8% per annum. So you don't have the ups and downs of the stock market. It's paid either quarterly or it's paid at the end of the loan term. So it's a different form of investing. It's just a different alternative for people.
mm. And can anyone invest with property bridges, or is there some sort of like requirements? And then on top of that, for those listening who still aren't, like, maybe aren't as investment savvy, how does property bridges differ from, let's say, like traditional stocks and what's on the market?
Yeah, so anyone can invest. Like we're regulated with the central bank now, so we have to go through an onboarding process that's kind of verified under the crowdfunding regulation. So people need to um, provide details of their investment knowledge. They're supposed to do an ability to bear loss test before they start
Mm.
investing, and then upload a copy of the passport and proof of address. And sorry, what was the second part of your question, Aaron?
So how does so for someone who still isn't too sure, how does property bridges differ from, let's say, like traditional stocks, equities, ETFs, that kind of thing?
Yeah, so it's different in the sense that it's more of a fixed income investment. So it's
Yeah.
not you're not investing in a stock that could go up or down, and you're making a capital gains on it. You're effectively what you're actually doing is you're lending money to a small builder somewhere in the country. So we'll have a property bridges. We'll have a loan agreement in place with the builder. We'll take security over the asset, and then we'll extend a loan to that builder. So there's an obligation to repay. We'll monitor that project from start to finish, and then when the houses are sold and the loan's paid back, that's when investors get the return.
Yeah. And why would a small builder, for example, go to somebody like yourselves opposed to a traditional bank?
The banks don't have much appetite to lend in this space anymore. Like since the crash, the banks have kind of turned away from the property market. They've turned away from lending in general and moved towards capital markets more so than kind of providing loans to SMEs. So the short answer is that there's no appetite from the banks. If there is an appetite from the banks, they can be very slow and protracted, and not very flexible when it comes to the terms of the loan. So we'll be much quicker. We're a small team, but we're solely focused on real estate lending. So we're specialised, and we'll turn a loan around in 4 to 6 weeks. With a bank, that might take 4 to 6 months
Wow.
or longer.
Yeah. And in terms of, obviously you're analyzing these developments in terms of, credit and stuff, is what would be the like what are the main things you're looking at when a new development project comes your way?
Definitely, track record is up there, number one. So we look at the projects that the builders built previously, and we'd
Mm.
look at the level of equity that the builder's putting in themselves. So we'd never provide a 100% loan. So typically, let's say a typical loan would be like a builder might go off and buy a site. Site might have full planning permission for 20 units. So let's say the builder buys that site for, I don't know, depending where it is, like 1.5 million. We would expect the builder to almost buy the site with their own resources and then come to us for the construction loan. So we might be providing 100% of the construction loan, but they might have 1.5 million of their own money in the ground. And then the way we fund that, so it's not like a personal loan where you're providing the full loan at the start and they can draw down. So we'll only release the money kind of in arrears. So the builder will go off. They'll do 1 month's work. We'll send their QS in. So at the start of the program, the builder will send us a program. They'll send us the costings. Our QS will do their own assessment on it. They'll make sure that the cost is appropriate for the product that's being built. They'll look at the program. They'll look into the resources that the borrower will have and say, well, okay, you're building 20 houses in 12 months, but you've only got, 5-person team. It might take a bit longer. So we look at all those aspects and we'll agree everything at the start. So we'll agree the program, we'll agree the budget, and then the builder will go off. They'll start building the project, and then every month the builder usually submits a drawdown request. RQS will go in and inspect the work, and then we'll release the funds. And we're always doing that in arrears. So the builder goes off and spends the money first, and then we'll kind of backfill it then.
Mm. And that's a really good point about that almost skin in the game, you'd say. So the builders, fully backing this project, and like you said, he's got cash um in the ground. You've been now, in this industry a couple of years. We've seen, of course, with the housing crisis currently ongoing in Ireland, costs of materials have been fluctuating, especially in around COVID. How has the landscape changed and evolved in the last few years? And what do you see, happening in the next couple?
Yeah, well, it's disappointing to say that the landscape hasn't improved. So I don't see the supply of housing increasing materially at all over the next few years. I think some of the policies in place aren't helping. I think the planning process is extremely difficult to navigate, and there's a huge amount of risk in the planning process. It doesn't appear that there's enough zoned land, and all these things have a knock on effect. Like you can't building's not a thing where you can just turn the taps on and expect units to be built overnight. A lot of these things are structural and take time. Another core problem is getting connected to services. Like you would have seen the kind of drainage project in North Dublin that's been stopped by one person who's objected. But trying to get a connection or an electrical or Irish water connection can be very difficult. So in the middle of a housing crisis, there's a lot of home builders out there that are trying to get things done, and the amount of hurdles and buyers that there is to getting things actually built is just makes it very difficult and protracted. So the it's yeah it's I can't see it changing anytime soon.
Yeah. And even in your own opinion, what do you think, or what would be the best thing for maybe the government to do to alleviate this kind of this pressure? Because I know you mentioned the policies that are in place. Like, is there an 80/20 thing to fix as such that would like alleviate that pressure?
They need to zone more land. They need to fix the
Yeah.
planning process. They need to make the planning process more certain. But the biggest thing for me would be that it needs to be more viable. So if you're a builder, you're taking like a huge amount of risk, and I know there is a narrative in the media that like house prices are very high, so
Yeah.
it's very easy for the public to look at high house prices and make a straight line back to developers making a load of profit. I mean that's it's just not the case. The margins are actually quite slim in the industry at the minute. And if you look at the cost of actually building a house, about 25% of the cost of building a house actually goes straight back to the government.
Okay.
If you so like VAT, like straight off the bat, you've got VAT 13.5%. Like there's no VAT on houses in the UK. So so VAT could be cut. Ideally, I'd like to see VAT cut to zero, but that's not going to happen. There is talk in the budget that they're going to cut VAT on new build apartments from 13.5% to 9%, which is a step in the right direction. But I don't think it's far enough. So improving viability is the main thing. The developers we deal with, they'd much rather be building more houses at a moderate profit than a small amount of houses at a high profit. So that the narrative that's out there sometimes is not helpful.
Yeah, it's a really strange landscape because it's almost like they're giving up future success, for, like you said, that 25% back now, whether it's through the VAT or whatever it is. But as a company, then how do you navigate that? Because, like you're saying, they're not giving up these zones. How do you plan to maybe expand in the next few years? Is it try and get bigger ticket size, or are you thinking about a move globally?
Yeah. So I guess the one good thing as a lender is with there not being that much supply, and we'd love to see more supply, but with there not being that much supply, it's a good time to lend in terms of the risk is very low because everything we fund is getting sold very quickly, and it's getting sold at a higher price than what we would have underwritten the loan at. So it's a good environment to lend in. Although I don't think it's a good environment if you're a young person trying to get on the housing ladder. In terms of how we expand, yeah, we so the retail platform that we use to fund some of the smaller loans, like that's capped at 5 million. So we have a credit line where we credit line from Swedish Bank actually, where we can lend up to 15 million. So we're looking at larger projects through the credit line, and then we're actually going to do our first loan in Portugal this month.
Oh, nice.
So it's an Irish borrower that we've dealt with a number of times here and there, building a portfolio in Portugal. So we're going to fund their first project over there.
Very nice. I look forward to seeing that actually.
Yeah.
Um, in turn, I just a another. It's just a more of a specific question, but obviously, you have this platform where you're dealing with other people's finances and money and that sort of thing. And how important has it been to establish trust? And then, like, how do you go about establishing that trust?
Yeah, it's a number one thing, the absolute number one thing. It's absolutely critical for us, and it took time to build up. Um, so we launched in 2018, and we've got an excellent track record now. So the people that kind of invested with us at the start are reinvesting more money with us. Um, we have new lenders signing up all the time. We have a trust pilot account where people can go on and review us. And then we try and always kind of market or put out in LinkedIn and various social media channels kind of every time we repay a loan, and kind of the success that we have on that side of things. But it is difficult. Ireland's a small market for retail investors, so we find it difficult. But we've over 8,000 investors now, so it's slowly going in the right direction.
And yeah, you mentioned a lot of those investors, reinvesting and staying with you guys. What would be, the typical investment horizon of people are going? Are they looking to set this aside for their pension? Is it people looking to make maybe in the next 5 years? What is it?
Yeah, so the average loan term would be 18 months. So people investing, they can either withdraw that within 18 months, or reinvest it. A lot of people do like the short term time horizon. They just like the ability to withdraw if they need it. Um, but a lot of times people reinvest. So we are open to self administered pensions, but most of the funding we get is through extra money people have sitting in a bank account. And also more recently we've got a few businesses that actually have got in touch. So they've got idle money sitting in their business account, and the one earn a return on that. So we've had a number of businesses get in touch recently.
Interesting. And if so, if someone is maybe kind of contemplating, whether if they should invest in, you know, like say for example, you have an individual who's been putting it on the long finger, investing that kind of thing. How would you recommend Property Bridges to them? Should they just go up and sign up for an account? Should they just check it out? What would you advise for them to do amongst the all the other options that are out there?
Yeah, so with us, I mean, you can sign up in a matter of seconds through just an email address and phone number. And whenever you sign up, you've got access to our platform. So for every loan we put out a key investor sheet and a credit paper.
Mm,
So people can look at the exact details of the loan, and then they can decide whether it suits their risk profile or not. You can also invest from €500, which is a small enough amount for newbie investors. Yeah, my advice is just to log on to the website, have a look. There's also a few YouTube videos we've done with a few influencers, or finfluencers as you would call them,
Yeah.
who've tested the product, who've used the product, who are going to highlight the risks, and some of those are quite informative as well.
Yeah, actually, it's exactly where I found Property Bridges first. I remember I was watching because obviously interest rates were low at the time, and with the deemed disposal rule with ETFs here in Ireland, it's pretty counterintuitive.
Mm.
Yeah.
Have you seen that as well? Because I know we mentioned that accessibility and the likes of DeGiro, Trading 212, coming up these easy to use platforms for people. Um, has demand really grown since you've started in this? Because I know even from ourselves in the last couple of years, it seems everybody wants to get into a new alternate investment, whether it's crypto or something like property bridges.
Yeah, it's definitely going that direction. So people are starting to invest through their phone or on their laptop, and um, there's definitely a demand for it, and it's only going one direction. But with that,
Hmm.
there's more competition. So there, the apps you've mentioned, Trading 212, DeGiro, um, they're all out there. They're all easy to use. I can see why retail investors um, would use them on a regular basis. I would have used them in the past. I think they're great. I guess we are investing in an app. We're investing in a new product. We're investing in a new platform because to stand still in this market, you're going, everyone's running past you. So you have to continue to invest. I guess specifically what we're offering in terms of the actual investment product is a differentiator. So like Trading 212, DeGiro, they're all primarily stock trading platforms, whereas our investment product is different.
And out of interest, is there, aside from property development, is there any other alternative investing vehicles that you would keep your eye on that maybe other people should maybe have a look at?
Yeah, so I think the crowdfunding industry in Ireland is small, but I think it's well worth a look. Like Spark crowdfunding and Link Finance, they're two good platforms. They're both regulated by the central bank, like us. Um, in terms of others out there, yeah, I would recommend the Irish ones primarily.
So you're bullish on the Irish market at the moment. Is it fair to say, or is there still some changes need to be made?
Yeah, like it's. I think the economy's quite strong at the minute. Obviously, we don't know what's around the corner. There's a lot going on from a geopolitical point of view, but when you look at kind of the surpluses we've been running over the last few years, kind of where the job market is, kind of certainly in the property market, like the growth in the population. Like we've got one of the fastest growing populations in Europe, so we need housing, we need infrastructure. So I would be generally positive on the Irish economy over the next few years.
A bit of a long term question. What is your vision for property bridges in the next maybe 5, 10, 15 years? Where do you see property bridges at?
Yeah, so we want to be we are seen as an alternative at the moment. So we
Mm.
want to be more mainstream over the coming years. Even the questions you've asked, like, oh, why would a developer go to you than a bank? Like, we want you to be asking the reverse question in 5, 10 years. Like, why would you go to a bank? Like, we need we are a small, modest platform. Like we've built this company on a shoestring, and we've done it well. And we're trying to, we've got a traditional business model where we try and make a profit if we can. So we're not the type of company that's gone out, raise a lot of money, and is able to build kind of the latest kind of market app. We're trying to kind of build up a good loan book, improve the app, improve the technology, keep like taking like a few steps forward each year, and keep up with the competition. And then like if you look at kind of what we've achieved over the last couple of years, like we've got regulated by the central bank, which was like a big achievement for a small company like us. We've got a credit line from a Swedish bank. Another big achievement. We'll do our first loan in Portugal, which is another big achievement. So we need to improve our technology. For lenders, we need to, if we make inroads into the Portuguese market, we need to start going after Portuguese investors. Like there are some pan-European peer-to-peer platforms out there. So I don't see why we couldn't be one of them.
Just just I'm just interested in this. Why Portugal? Is there a specific reason to go to Portugal first before maybe?
Yeah, so a lot of Irish
Yeah,
businesses would maybe see the UK as a natural progression when
yeah,
they're scaling. I guess the UK for us, it's outside of the eurozone now. It's they're using a different currency, so the regulation that we got regulated under was specifically European regulation. So when we got regulated by the central bank, it was much easier for us to passport into other European countries.
yeah.
So the two countries we identified first was Spain and Portugal. And there's a lot of Irish links to Portugal. There's a lot of Irish people living down there that holiday down there. They're like Irish investors would be familiar with Portugal more so than some other countries. And then it was an opportunist thing. So one of our borrowers who we lent to a few times is starting to do business down there. So we actually got a market discovery grant from Enterprise Ireland, which helped us a lot. So we're able to go down there, do some research, talk to lawyers, talk to valuers, quantity surveyors, kind of build up a bit of a kind of an outsourced team down there and understand the market. And that's what we've done.
Well, yeah, the best of luck with that. Really excited to see that project in Portugal and many others as you progress. In the coming years, people want to find out. They want to get involved. They want to have a look at the platform. Where should they go?
Yeah, www.propertybridges.com.
Perfect. And they want to follow along with yourself. Where should they go? LinkedIn.
LinkedIn's the best place to get me on. Yeah.
Thank you
Perfect.
very much, David.
Thanks,
Okay.
David.